Good morning, it's Harvey Jackson. We're just going to go through the Futures Focus report that Kyle puts out. It talks about positions and targets. So this is what the email looks like for the subscribers of Producer Profit. The ones that are not, this is maybe a bit of a peek what you could be looking at. So here's a visual of the exit point, and it has been reduced. So you just maybe want to take note of that as well. This is just kind of going through shipping by country, and there's something that Kyle has maybe pointed out here. There's some differences from one week to the next on last month's shipping, so we just have to keep our eye on that, see if that's going to be consistent. Um, a few things here. There's quite a few of the European countries now picking up. Belgium, UAE, Bangladesh pick up exports as the Canadian canola remains cheap in other markets. And another thing to note here is crush utilization is continuing to slip yet. And as a contract expires, there's sometimes a little bit of a wonkiness that can happen as that market or that contract expires. Still looking for selling opportunities, getting into these 660, 680, 700, and then Christmas volume can make this market swing pretty violently. So put your targets in. So this is one of the positions that we're talking about here, and it's actually, if we look at it, entry is still about the same. So this one's fairly new, or just put out on the weekend. So still going long futures at 603, exit at 670, and our previous position so just exiting a little bit earlier. So if you want to put in that target in there with your broker, you should. Red Spring Wheat, again showing positions for exit with the current position that he has on. So this is the current position way down here. So they enter long futures at 588, exit at 629, a little ways from that. So far, there's a little bit of positivity there, but there's really not much going on that's changing week to week on this one. There's some poor growing conditions in other parts of the world, and nobody knows what this Trump trade is going to do. Winter wheat in the U.S. with the drought monitor is actually showing improving in some of the winter wheat growing areas as well as of last week. So here's your soybeans, and expecting to go short if we get to a certain value here. So here's the setup for the short position. When the market gets down to 995, and then when it gets down to 953, you exit, and on the reverse, if the market goes up to 1005, you're getting out. So 10-cent potential loss there. Again, not a whole lot that's actually changing this market on the soybeans. Here's your corn setup. Another position that got put on last week. Just maybe have a look at that one. Here's the Canadian dollar position. He's actually we're looking at potentially going long the Canadian dollar at 7.7003, and then exit it at 0.7197. So have a look to see if that's something you want to do on the Canadian dollar as a trade as well. Just one other news piece: rupee records record low weak Indian currency, really. So here's your basic look at the canola. When I looked at it later, or just on the open, it was positive, but now it's $2 down. Rapeseed is down. Soybean oil is down almost a penny. Palm oil down 88 ringgits, and crude oil is down nearly $1. And the wheats are up. So just the other thing I want to talk about, this is the forward curve. And what you want to look at here is when the volume starts to increase farther out. So obviously this is rolling action that's happening from Jan to March. So a lot of contracts are getting rolled, and this is increasing the volume here into March. So just when that's happening, we'll start using that next month as the month that I'm going to be showing you on the charts. So here's January. They look identical, but with just higher futures values, right? So and this is a carry market. So what ends up happening as this one becomes the front month, the prices usually roll down. So we're just looking at that as a caution, because the market does tend to trade lower as we get moving into the January or from Jan to March futures. Here's your rapeseed. As of Friday, it made its high, just trading a little bit lower as of this morning. $203 differential between European rapeseed and Canadian canola in Canadian dollars. It's kind of crazy that those kind of values. Soybean oil, it's got a fairly long red candle rejecting the moving averages here and keep on trading lower. There's still some support down here for sure. Palm oil, a couple waves here, kind of get above the 5,000, slows down sales, get below, it picks up sales, and then we're getting this wave right around this high price palm oil. West Texas is actually starting to, you can see there's been some up waves here. Nothing's breaking out. It's still going down into a wedge so far. Soybeans themselves, range bound since October really, or November, or yeah, the last part of November, sorry. Canadian dollar, it's still got this long trajectory down, but looking for some support here at some point and trade off of there. Let's have a look at the wheat. Wheat has got some overhead resistance from just a support that we made back in November, and can't seem to trade through it. And here's your look at where we want that next sale to be made for 2025. DEES 25 contract, $7 futures is the futures first target. March Chicago wheat, it's actually didn't even get to the same retracement values, but it's still got a lot of pressure on it for sure. Red Winter, same thing. It's actually got the same formation. It made a lower high. When we look at if there's hope in the wheat complex, the MATIF, it looks like we're trying to break through here. We'll see how this closes today. Got above the moving average and trading higher than the previous high that we made back in November. And the same thing with the corn. It did trade above the previous high there. Now looking for it to maybe wave up here. We'll see. That's all I have for you today.